How the rich legally avoid taxes and what you can learn. For those that are new to the channel, I welcome you as we explore more about how the rich prioritize their wealth and strategies to maintain it. They say death and taxes are the only two guarantees in life. But if you're wealthy enough, only one of those really applies. While the average person pays 25 to 35% of their income in taxes, the ultra-wealthy often pay far less, sometimes even zero. No, it's not illegal. It's not tax evasion. It's tax strategy. And today, we're going to break down the legal tax loopholes the rich use to keep more of their money, and how you can start thinking like the 1%, even if you're not one of them yet. First, understand this. The rich don't earn like the average person. While most people trade time for money through jobs or salaries, the wealthy focus on assets, things that generate cash flow like real estate, businesses, and stocks. Why? Because different types of income are taxed differently. Earn $100K from a job, you'll pay around $25K plus dollars in taxes. Earn $100K from capital gains, you might pay only $15K or less. Earn it through real estate losses or business deductions, you might pay nothing. Let's look at the first major loophole, borrowing against assets. Wealthy people invest in appreciating assets, like stocks or real estate, and instead of selling those assets and paying taxes, they borrow against them. So if a billionaire has $100 million in Amazon stock, they don't sell it. They take a low-interest loan against it. No sale equals no tax. That loan funds their lifestyle, and it's tax-free. It's called buy, borrow, die. The next loophole? Depreciation. If you own real estate, the government lets you deduct the value of the property over time, even if it's increasing in value. This is called phantom loss, because the property may be appreciating, but the IRS still gives you a write-off. Let's say you buy a $1 million rental property. You might be able to write off $30 to $40K a year in depreciation, even if your cash flow is positive. That means you're earning money, but still showing a loss on paper and paying almost nothing in taxes. Another one, 1031 exchange. This allows real estate investors to sell a property, not pay taxes on the profit, and roll the money into another property. It's a legal way to delay taxes for decades, even forever. Then there's the trust and foundation strategy. Wealthy families set up private foundations where they can donate their money, get a tax deduction, and still have control over how that money is used. They also use irrevocable trusts to shift assets out of their estate, reducing future estate taxes. This is how billionaires pass on wealth without their heirs paying 40% in taxes. Next, business deductions. Rich people don't pay for things personally. They write it off through their business. A laptop, a trip, even meals or rent. If it's tied to business, it can be a legal expense. You can do the same. Start a legitimate business, even a content brand like this one, and learn how to structure your income like a business, not an employee. One of the most powerful tools, life insurance. Wealthy families use permanent life insurance policies, like whole or indexed universal life, to grow wealth tax-deferred and transfer it tax-free. It's not just insurance, it's a legacy and tax strategy wrapped into one. Now here's the secret. You don't need to be rich to use these strategies. You just need to understand the system. You can start small, form an LLC, invest in real estate, track your deductions, and learn how to turn expenses into strategy. Because the truth is, taxes are not just a bill, they're a game. And if you don't know the rules, you'll always lose. Now that's enough for today's video. Understand the free game I just taught you all, where the rich are playing the chess game, while the poor and middle class struggle financially. Now, if you want more content like this all for free, make sure you subscribe to the channel and like the video, where I post more content like this weekly. Also, leave a comment down below if you have any questions on how to maximize your wealth for futures to come.